it honestly scares me because what I think about is back to 2008 when we were in a terrible position. And the way it's looking right now, it looks like we're going to go right back to 2008 and hit a stock market crash. What's up, everybody? Welcome to episode 13 of the Bag Talk Show. Today is a crazy episode because we will be discussing whether we're going to hit a stock market crash, if the stock market is already crashing, or are we going to hit a bear market? Like, what are we doing right now? Because there's a lot of things going on in the world, and honestly, you're probably scared just like everyone else is. Yeah. So in this episode, we're going to talk about everything I just said, plus what you should be doing during this time period to protect yourself. So let's just dive in, bro. Talk to them what's going on in the market right now, the current news, and explain to them everything that we want to tell you guys about right now.
Exactly, man. We've all been feeling it right now. Them gas prices. Prices. They make you not even want to drive no more. Like,
absolutely. I might start biking.
We might have. You trying to bike tomorrow?
I got you, bro. Healthy.
I say less. You know what I mean? Yo, over the weekend, gas prices topped $4 for the first time since 2008.
Yup, and honestly, we weren't even driving in 08, but, you know, we were just chilling for Xbox, Halo, come see me in 2K. But basically, we didn't care. But now we care. And I know you care too, because your wallet is a hurting.
Absolutely.
So gas prices obviously goes up, which I need you to keep in mind right now because this hits to the next point, inflation. So the new inflation news for February comes out on this Thursday, okay? The reason why that's important is because we've been talking about it on the channel non-stop. Inflation is at 40-year highs, guys. So it's usually around 2 to 3%, and now we're crossing more than 7%.
Yeah.
It's obviously very scary times, right? But you guys might not understand exactly how that impacts you, right? So yes, inflation is at 40-year highs. Cool. You guys are paying higher fees for gas now. Okay. But what does this exactly mean? So, Terrell, you want to tell them real quick, bro?
Yeah. So in a high inflation environment like we have, last report, we had an inflation of 7.5%.
Yep.
Horrible, right? The Federal Reserve has to come in and do what? Raise interest rates. Yep. That's what they do to combat inflation. When they raise interest rates, inflation goes down. Ideally. Yeah. Okay, so that's what they're going to do because the thing is, the reason why it brings it down is because it costs more money for businesses to borrow money. And that's what businesses do to grow their business.
Exactly. If you think about it, right, all the tech firms, what they end up doing is they literally borrow money and invest it into products, invest it into people, invest it into other businesses. But when they borrow that money, you gotta pay back the money to the bank. And when it's a lower interest rate, you're not paying back as much. However, with higher interest rates, now they're gonna be more hesitant to borrow, which means what? They're not going to actually be able to invest as much as they used to. Then that hurts their balance sheets. That hurts their income statement. AKA, it affects their net income.
Exactly. And a lot of those costs that when they take on heavier costs, it gets passed down to consumers.
Yeah, hell yeah.
Right? So we really feel the hurt based on all of that as well. And we could also feel the hurt when we want to borrow money for a car.
Absolutely.
Any type of loans we take out, we're feeling that.
Yeah, and that's the crazy part, right? So think about what he just said. Like, if Apple or Microsoft now come out and they're not borrowing as much anymore because what we just said with interest rates, they're going to still make their money. Don't get it twisted. They're still going to make money, bro. They're just going to increase the price of the iPhone, of the laptop, like the MacBook, or the Microsoft's going to say, we're going to charge businesses more now.
Yeah.
That means we, the people, pay more for the iPhone because I know you all want the new iPhone. You got the camera, you know? So all that is very, very big.
It is, and you know what? At a point when they have to increase costs, the businesses, it slows down demand because at a point we just can't really pay for it no more.
Absolutely.
In a high inflationary environment, we all had so much money, we just wanted to spend it. When they increase prices, we don't want to spend anymore. Demand slows. And it brings the economy back to a state of stabilization.
Yep. So that should give you some type of understanding and comfort into knowing why things are happening the way it is and why the Fed is going to increase the interest rate. Okay. But now let's talk about it. What is going on in the market, bro? Is the stock market actually about to crash right now? What's going on?
Yo, listen, man. So stock futures have dipped after the S&P 500's worst day since October 2020 amid the Russia-Ukraine war.
Yep.
All right. So the blue chip Dow tumbled almost 800 points for its fifth negative session in sixth.
Sheesh.
While the tech-heavy Nasdaq slid 3.6%. All right, which falls into bear market territory.
Yep.
All right. That's down 20% from its record high in November.
Which is crazy, right? So when you think about everything you just said and all the stats, it honestly scares me. Because what I think about is back to 2008 when we were in a terrible position. And the way it's looking right now, it looks like we're going to go right back to 2008 and hit a stock market crash. That's scary.
Oh my God, that's scary.
Because when you think about it, you know, the stock market doesn't just crash. It ends up going in phases. Yeah. So as you just said, now, because of the NASDAQ, which is tech heavy, right?
Yep, NASDAQ is tech heavy.
So that is going down. The Dow is going down. The S&P 500 is going down. It's scary because with the NASDAQ being in the bear market territory, that's how it starts, bro. That's literally how things start.
Yeah, exactly. You know, we talked about inflation and how they have to raise interest rates. A lot of tech companies borrow money the most.
Exactly, absolutely.
Right? So why do you think that NASDAQ tends to fall the fastest? NASDAQ tends to fall first. When they raise interest rates, you see how NASDAQ fell.
Yeah, absolutely.
NASDAQ fell first into bear market territory before the other indexes did.
Yeah, and if let's just slow it down a little, right? So for those who don't know, like S&P 500, NASDAQ, or the Dow, let's just explain it to them. So S&P 500 is the top 500 stocks or companies in the U.S. Okay, then you got the NASDAQ, which is the top 100 non-financial companies. However, as you said, it's tech heavy.
Yeah, it's a lot of technology companies in there.
Exactly. And then you got the Dow. So that is the large 30 companies in the U.S., okay? So it's very, price index? Because it focuses on price, right?
It focuses on price. Like, not every company could qualify for the Dow. Like, for example, Amazon can't qualify for the Dow because they try to take stocks with a lower price.
Exactly.
You know, so sometimes stocks will split and qualify for the Dow. You know, like Google could potentially qualify for the Dow.
Yeah, because it's the price index on that.
Yeah, when they do a stock split in July coming up.
Exactly.
All right, so yeah, that's Dow. You know, top large 30 companies, but it's price weighted. S&P 500 is the top 500 based on market cap.
Yeah, exactly. Right. And speaking of market cap, just keep that in mind because we're about to tackle that. But we've been saying bear market. Let's just explain to you guys what bear market is because it is different than a crash, which is also different than a correction. Okay, so a bear market is essentially when the indexes that we just spoke about end up going down 20% from its recent highs. Okay, so that's scary because as we just told you, the NASDAQ has entered bear market territory.
Yeah.
So just keep that in mind. Like it was at a certain point and now it's 20% below. That's a big difference.
That is a big difference, for real.
Exactly. So now that we scared you guys enough and you guys are probably panicking in your seats like, yo, what's going on? What am I doing? What am I doing? Let's talk about what you should be doing during this time period, okay? Because we're going to give you guys tips right now, and we're going to help you out. So let's just talk about the first one, bro. 401k, what you got for them?
Listen, this is the perfect time to be investing deeper into your 401k. All right, because the 401k is a way of dollar cost averaging at the end of the day.
Honestly,
but the most lit part or the most amazing part about it is the fact that if your company matches, it's like putting double the amount of money into the market at these lows.
Absolutely. We're going to show you guys a quick little graph, as you can see right here. So this is essentially showing you guys the average downtime or downturn of the stock market, right? So from 1970 to 2020, essentially, you could see how much, the market went down. The average was 15% down, okay? But it does recover, as you can see. So when you think about it, if you're investing in the 401k, and this happened in 2007, 8, and 9, people who were investing in their 401k and the company was matching, they saw their account get cut in half, bro.
Yeah, at a point, got cut in half.
Yeah,
definitely.
I would be scared, right?
Yeah.
However, if you did not pull out and you continue to do what you were doing, which is investing in your 401k, by 2015, 2016, I believe, they made a lot of money because the market had recovered.
Yeah.
So keep that in mind. Do not stop investing in your 401k. And that's tip number 1 for you guys because it's very simple to do so, especially if your company matches, which most companies do during this time.
Yeah, it's remember, we always talk about buy low, sell high.
Absolutely.
People always tend to do the opposite.
Always.
So it's in these time periods, this is the perfect time to buy. So please keep allocating towards your 401ks because we saw the example from '08. Those people who kept going in, they made amazing returns. They're in a whole different place in life because of that.
And we're not trying to say the market crashing is a good thing. It's not a good thing. People who say they want a stock market crash, you do not want that because, people lose their jobs. People end up killing themselves because they can't afford things, can't pay for their family needs, etc.
Yeah.
However, when the market does crash, millionaires are made.
At the same time, yeah.
So we try to, keep a good balance here, but just continue doing what you're doing. And I know you just said continue to buy. So let's talk about what you should buy, okay? So in this part, we want to say what? Value over growth.
Yeah.
Please keep that in mind. Value stocks over growth stocks, okay? So you want to explain them real quick, what the difference is? Like, what is a growth stock?
Yeah, so growth stocks are things that are like more speculative, right? Things that are not necessarily as established yet. Like growth stocks could work out for you. Like even if you look at something like a Peloton or like a Zoom, those were growth stocks and they worked out in an inflationary environment, right? When we were just printing money, everybody had money to spend, so they spend it in the market and they'll push up things like growth stocks. When we have the Fed increasing interest rates, and the market is slowing down, growth stocks have suffered severely. I know you guys have seen what happened to things like a Peloton or a Zoom.
When you think about it, right? So the way that I think about things is really simple. Growth is like basically saying it can grow, right? It has a potential to beat the market. So that's how I think about growth stocks. And like to add on to this, they're usually small to mid-cap companies. So small market cap is essentially when you have around 800 million to about 2 billion. Right?
Yeah.
And then you got mid, which is about 2 billion to 10 billion. Okay, so I know we're saying small and mid, and we're talking billions of dollars. However, just keep that in mind. Okay, so that's sorry. Go ahead.
Now I was just gonna say like small cap is like about 200 million.
Oh, 200
or 300 million or so, around 200 or 300 million.
Got you.
To about 2 billion. Yeah.
Yeah. So that's important to know because, as you just said, bro, when you invest in Zoom or Peloton, it's great during growth, right? When we're hitting bear market territory, you want to be into value stocks. So what is a value stock, bro?
Yeah, those stocks that are proven, those stocks that are, if anything, like in times like these, the stocks you want to be in because they can survive market conditions like these because they are really value. Like they're exactly what they sound like.
Nah, for real. Like if I think about it, if I'm going to the playoffs, right, in the NBA, I want the best team. I want the best players. Like that's literally what this is. When times get rough and it's like serious time to go at it, you want the best companies. So you want large market cap companies. And that's basically saying anything more than 10 billion.
Yeah, and the thing is the reason why people wouldn't be in value stocks in the first place initially is because they're like, oh, it moves slower. Yeah. The price doesn't go up as fast. At the end of the day, there's a yin and a yang to everything. Yeah. Because the thing is, they might not go up as fast per se, but as you guys can see now, they also don't go down as much as those growth stocks you were in. So in the long term, the value stocks made you better returns than the growth stocks.
And watch this, right? I'm asking a question right now. Bro, if I gave you $1, okay, and you lost $1, are you mad?
I'm chilling.
Okay, if I give you $10 and you lost the $10, you're going to be more upset, right?
Of course.
Exactly. But let's just think about it like this. If people tell you right now, yo, I want to invest my money, right? I want to make as much money as possible. That's what I want to be in the Zoom and the Pelotons.
Yeah.
It's great when you're making money, okay? When that $10 turns to $12, you're like, oh, okay, I didn't make that much money. When 10 goes to 20, you're super happy. You're like, oh, I doubled my money. As soon as that 10 goes to 5, you're sick.
I'm sick.
You're tight. I'd rather my 10 go to 12, 12 go to 14, 14 go to 16, rather than taking that crazy jump during this time period. Because if that 10 goes to 5, I'm going to be sick.
Exactly.
Right?
Exactly.
The game is to make money. The game is not to lose money, bro.
Yeah.
Just keep that in mind. That's why, companies like Costco, companies like,
Procter and Gamble.
Thank you. Procter and Gamble. Like, those are the companies that you really want to go with during this time period because they're safe companies, bro. Market crashes, y'all still need food, right?
Still gonna need food.
Exactly.
Still need the necessities at the end of the day.
Exactly.
And the thing is, companies that we've talked about on here like Apple or Microsoft or Google or Amazon, you may see decreases in their price in this time period.
Yep.
Because as we said, like tech companies get hurt when we're trying to fight inflation. Okay, cool. This is the best time to get into those if you're a long-term investor.
Yep. Because
once things stabilize and we get back to normal, man, these entries you getting in now, Literally life changing. Like,
So,
literally.
What he just said is literally tip number 3, actually, for you guys. So let's just talk about it. DCA. I know y'all tired of it because we talk about this all the time, but please, for the love of God, dollar cost average your way to being a millionaire. For real. Like, when times are tough, which they are right now, if you can invest on a monthly basis in good, credible companies like the value stocks we just talked about, or even indexes, the S&P 500, the total market fund, whatever you feel comfortable with, you're going to love yourself, bro.
Yeah, definitely.
You know,
definitely. My fault, continue.
No, I was just saying, you really will be happy because you're buying at lows. You're literally buying at lows. You're not worried about timing.
Exactly. You know, so if you have, and I like you that you said that, like, you're not worried about timing. Because let's say you had $1,000 to spend, you don't want to throw all 1,000 in on Monday, and then the stock market continues to decline.
Exactly.
On Thursday, you can be like, dang, I don't got no more money to spend.
Exactly.
You know, you blew it all at once. But if you would have taken a chunk at this point, a chunk at the next point, a chunk at the next point, and broken up that $1,000 over time, you'll profit way more than the person who got in at a horrible entry.
And honestly, this is gonna sound a little cliche for you guys, right? Like, don't chase the quick win, bro. Like, I just started this new book, right? The Compound Effect, and it literally breaks the same example as we're trying to talk to you guys right now. When someone's trying to lose weight, they start working out after like 3 days, they don't see no impact or change, they stop.
Yeah.
However, that person that continues in a month, 2 months, 3 months, they start seeing a change, and that's what's going to happen to your portfolio if you invest on a monthly basis with dollar cost average. The compound effect will kick in.
Yeah, always. It's a proven strategy, you know. So it's like, why go against it? And the thing is, you might be like, well, dang, I'm not going to see any money for a while as the money is going down in this time period. And it's like, first of all, if you're a long-term investor, take advantage of this. But the thing is, when you really get good at the stock market, you know how to profit in any type of market. As the market is decreasing, if you learn how to trade, then you will be very profitable because you can make money in any market.
Yeah, honestly, like, we don't talk about it yet because we're trying to help you guys out understand things. But realistically speaking, if you're a good investor, bro, you can start doing puts right now.
Exactly. And we'll talk about options on this channel too, you know, and even swing trades, like, there's good swings you can make in this time period. You get into the stocks that'll benefit in a wartime, like Russia, Ukraine.
Oil stocks are going crazy right now.
Exactly. So people have made plays on XLE, which is like an oil ETF. You know, people have made plays on things like these because they understand, like, everything else is crashing, but oil is going up. You know, so you find your ways in the market to make money at any time. But if you don't have experience trading, or you don't know what you're doing, you don't know how to run technicals, you don't know how to run fundamentals, please don't even try it, because you're gonna get burned. Like, don't follow people on Instagram, you know, flaunting how much money they made trading, but they put the work in to study. You know what I mean? So I want you guys to just focus on your long-term investments. Just allocate. You just gotta, like, be patient in this time period, right? You might be down for a while, but if you get great entries, you're gonna love yourself.
Yeah. And honestly, I want to make this point very, very clear, because one thing you just said is dope, right? You know, people who put work in, are learning options, are learning how to trade, they'll be successful. And when you say, yo, if you're new to this, just do DCA, that does not mean, like, he's not calling you dumb by saying that. Because I know some people get offended, like, yo, like, I've been in the game for 6 months, 7 months, I've been in the game for a year, I could do other things. With all due respect, bro, when the greatest investors of all time are talking about DCA and long-term trading and long-term investing, that's what you should be doing. You know, so don't get offended, because I personally do DCA. I personally invest in S&P 500 and the total market fund. Like, I don't, you know, we already spoke about a strategy and what we do. So if you want to check that out, I'll put the link in the description below. But don't get offended. Like, if literally, just keep it simple, bro.
Yeah, like, there's nothing to get offended about. It's like a game of, like, say you talking about basketball, right? Like, think about it. Some players could do everything. Like, you could have somebody like a Kobe. He could shoot, he could dribble, he could pass. Kobe could do everything. And then there's some people that are just specialists, like Pat Bev, like Patrick Beverley.
I knew he was going to say Pat Bev. You always bring him up.
Just a specialist. He's just a defender. He hustles. Cool.
He's just running around yelling.
He could, like, you know, that's like somebody who's just a long-term investor. They DCA, and that's cool. Master that. Get the best entry prices and
because if he started doing everything, he would get kicked out the league.
Exactly. You got to know yourself. And so people like Kobe put in the work to be so skilled in every area.
That's a fact.
Once you put the work in, start running those trades.
Yeah.
You could paper trade at first. That's how you put work in. Whatever you want to do. And we'll cover these topics going forward. But I just don't want to see people getting hurt in this market.
Because literally, if you start doing other stuff, right, you're gonna end up being like Pat Bev and you hate that the league. AKA that translates to your portfolio on a zero. Done.
I've seen it happen.
Facts. No, honestly. Yeah. But that was tip number 3. Let's go on to tip number 4. This is very, very important for you guys. Stay cash heavy and live below your means. Okay? Yeah. Like, we need y'all to understand that because, and this is just sad, but when people end up losing their jobs, bro, and they don't have a saving account, they don't have cash on their hands, it's sad because there's a reason why when the stock market goes down and there's a bear market, there's a crash, there's a reason why people, the suicide numbers go up. Because people can't do what they got to do.
Yeah, man, and it's wild because we tell people in the budgeting, like we made a budgeting video.
Exactly.
You can check it out on Rookie Mondays, right? That was episode 2.
The link in the description below.
Exactly. We tell people to allocate towards their savings while they invest. And the thing is, it's good to stay cash heavy because you never know what happens, especially in a time where war is prevalent. Like we're dealing with Russia, Ukraine, and we're so early in that. Like so much can happen, and you don't even know. So you need to have a fund to support yourself. Also, if it doesn't become like a physical thing where we're harmed physically, you need to have a fund so you could buy assets, because we just talked about the market crashing and how people who invest in these time periods, that's how you create millionaires.
You literally become millionaires. So do what you gotta do, but remember, stay cash heavy and live below your means. Don't be going crazy right now trying to buy everything just because you want to flex on the gram. That's not the smart thing to do.
Please don't. Yeah. Please stick to your budgets, man. And if you don't know how to make a budget, please check out our video and also download our budgeting template. It's automated, it's free, and the link is in the description.
Exactly. So do what you gotta do, but those are the tips right now to help you survive during this tough time period. Also, we're going to keep on saying until things get better. Hopefully everyone in Russia and Ukraine is okay right now and they're staying safe. All right. But that wraps up our video. If you did not check out the Rookie Monday episode, it was actually a really cool episode because we are starting our crypto chapter now. So you go, check that out because we explain what crypto is. I think we did a pretty good job too.
Yeah, of course. We always do a good job.
Exactly. So make sure you check that out. But we will check you on next Monday.
Wait, did they even like this video? I know y'all watched all of this, but
wow. Yeah, good catch.
Could you comment, and could you please subscribe? And could you also hit the notification bell so you know when we're dropping videos right on time?
That's a fact. I actually almost forgot. You almost got away with that, man. Get out of here. Get out of here. All right, but we're going to catch you on Monday. But until then, peace.